Hello, once again, I'm BR Schultz. Thank you for joining me for another BR Schultz SP500 episode. It's April 5th. I figured I'd give a quick update to the model's presentation. Obviously, I failed it on the April 2nd low, but there were quite a few calls that were pretty close to correct, so a little bit of credit given, but obviously not the full 8 by any means. So if you followed me on my blog, I was looking for a peak around 57.40 on the SP500 USD on tradingview.com, and that's exactly where we hit actually the night of April 2nd. So understanding the Einstein model was key to understanding what the upper level limit would be to markets, but we really needed to hit that during the daytime hours. We needed to hit that during the core business day hours for the S&P 500 index, because it hit it on the futures after the close of the index, after Trump had spoken. The futures rocketed up and hit that level. The Einstein model did not trigger wave 3 up. So I think somehow the model is highly sensitive to somehow how the Federal Reserve controls the S&P 500. And so if they would have done that during the daytime hours, we would have had wave 3 up and you would have had a 5-wave move. But because the model failed to reach 57.40 during business day hours, wave 3 failed to trigger, and therefore we're in this crash mode, if you will. So I wanted to give you a quick update on what's going to happen between now and May 7th. You can already see from the thumbnail it's April 30th. So I want to take the Einstein model at its very technical level, if you will, and try to explain to you what I see here. Thank you for joining me. I'm BR Schultz. Donation QR codes and donation link below this video, and PayPal link below the YouTube video down in the description. Thank you for following me. So because the model failed to form wave 3 up, there is a nice, very clear shot out to May 7th and April 30th, roughly. So why is it 2 dates? If you look at where the ones are situated, the Einstein model like double bottomed around early September 2024. And because of that double bottom, you're actually forming 2 starting points. And so they actually form 2 different trajectories off of point number 4 for the yellow and black point number 4. So you're basically arriving at 2 different bottom dates. So I would assume that the lowest low is most likely on April 30th. You could have retested it on May 7th and the Fed date. But those would be the dates I'm looking for the lowest low. Now, is there still a major low out in June? Most certainly. I truly believe that's there's a big low out in June too. But where does the model recommend watching for the lowest low in markets? It's looking for the biggest low or the lowest low in markets around the end of April or May 7th, and then mid-June as well. So I would like to see, 4,300, let's say, on May 7th or April 30th. That would be, I think, a huge opportunity to go long. I was going to put my 401k in early April, but I was looking for a 400-point move, right? I was looking for a 5 to 7% swing opportunity into my 34-week moving average high, because everyone always asks me, what do you think the peak range is going to be? And I always reply, like, I think it's going to be the 34-week moving average. So if you look at the 34-week moving average, it's up at about 5,800, 5,820. So on April 2nd, I really wanted us to close around 54.40 or April 1st, right? So you'd have a distance of about 400 S&P points to make 5 to 7% on your money. And then I was planning that would take us out to Good Friday, that 400-point swing. But as we all know, markets went up to 5,700 on April 2nd. So when I saw that, and 5,800 being pretty much my hard stop for a top, I was never able to put my 401k in. And I'm not a licensed financial professional at all, but I'm just letting you know from my own experience, my own thoughts on this, and I could have failed completely by doing this, right? But I tried. I was hoping that we're gonna go down into near even below 5,500 on one of the closes on was it March 31st or April 1st. I was hoping for a very deep red close in the 5,400 region, maybe even 5,500, to again give enough point range to run up into 5,800, 5,825 zone, right? So that 5 to 7% to make on my money. But it never happened, right? So on April 2nd, we had, or sorry, on March 31st, April 1st, and April 2nd, we had green closes on the S&P 500 index, cash index. So I never got an opportunity to put my 401k in because we never had that 5 to 7% running distance up to 5,800, 5,825. So why do I say all this? Because I want to educate my viewers of how I view what you need to make money in a sideways market, right? Because I've been saying since February that we would have a crash. It looked like a 1987 opportunity, more than likely, that this would be range bound to lower into mid-June. And so when you have a range bound market, you're not going to be making new highs, right? So you have to be looking at how many points you can run up. So I know I've said this many times on my blog. I've said this many times in videos, but I'm trying to explain it because even though I feel like I say it in videos, sometimes it gets lost, or sometimes the emotions of trading just get in the way. But either way, that's what I mean by range bound to lower markets. That's why I say that, right? That's why I communicate it. I do my best to communicate it very clearly, that you have to have running room, right? I say that on my blog a lot. You have to back down to have running room to run up, so to speak. So I say that on my blog a lot, and in late March I had 54.40 as my kind of like my low target for markets, and so I really wanted to see us drop down to 54.40 so that we'd have again 400 points to run up into 58.40, so to speak. So that's why I say that. That's what I mean by it. You have to have running room in a down market. And again, I've been saying, I think since end of November 2024. I think I started putting that on the last slide of every presentation, if you will, that I was projecting that there'd be some type of major low, that markets would be lower to sideways downward into mid-late March. So that's the flavor I was trying to go, and then mid-March came along. I say no, it's gonna be range bound more than likely into mid-June, and so I've been trying to paint a picture of sideways to lower markets. I even on TradingView.com, I will say that we were shipwrecked, so to speak, into mid-late June. The markets are going to travel sideways to lower, so I keep trying to reiterate those points. So hopefully, I know that everyone has seen or heard me say that, so it's come to fruition. I'm not always I can't get every swing correct, obviously. I'm going to fail at some point. But hopefully the general direction you see and value is legitimate, is conservatively minded, is not a pie in the sky type of mentality. That you see that was a realistic approach and thought, right? And that's really where I want to play my game, is try to be realistic in how I describe markets. Obviously, the more realistic we can be, and be accurate, the more money you can make in markets. So that's a little background. That's to put everything in context. And now that markets have plunged, right? Everyone's going to want to know, where do you see the low? So it hasn't really changed since the last video per se, right? Because the major lows are still the major lows. But what I want to do is a deep dive on the Einstein model and take it very seriously as to where it's projecting lows. And so on this Einstein model, essentially the clearest path is the most powerful low. And so there's not a lot of interference in this trajectory out to April 30th and May 7th. So it looks like some kind of double bottom. So the lowest low might be around April 30th, and then you might have a slight uptick and then a slight downtick for a wave down 2 into May 7th. kind of a pop and drop. So let's say April 30th we hit, I don't know, 39.70, right? Let's shoot for some type of extreme just for the case of explanation. So so what you do is you'd see a pop up of maybe 100 points, and then you'd see another, or 200 points, let's say, up to 4,200, and then you have a drop of 100 points back down to 4,000 or something like that into May 7th. You know, so I don't think you'd get a pop and drop in the model per se, but I think in the markets you will. So I think on April 30th you could see a bottom, a lowest low, and then you could see a pop up of about 200 points off the bottom on April 30th, and then a drop of like 100 points into May 7th, kind of like for a 50% retrace down, and then you could have that could be the final bottom, and then we could have some kind of retest in mid-June. But I just want to give you a market update real quick. I know it's not very long. It's not explaining everything, the full picture, but I want to give you an outlay of kind of how I think April wraps up and how May starts off. And I think you know that I have some very clear points here on the graph, and I think you can see by the two different ones on this graph here that it has two different starting points, and that's how I'm deriving my two different trajectories, and that's why I think the lowest low could very well be on April 30th. But again, it could be on the Fed date too, right? I could have the two items in reverse order. So, but I would assume that once you hit this low, you're gonna have some kind of pop after the April 30th low. So that's just my projection. But so I think the lowest low should be either April 30th or May 7th, and so these are where I'm going to be watching first. And then if we're still pretty high, and I guess you could have a lower low in June, but at this point I don't know which one's the lowest low, so I have to draw the viewer's attention to both the end of April, early May, and then mid-June as the model's major points of focus for the lowest low in markets. With that, this video is 13 minutes and 40 seconds long, and I'll wrap up. So until next time, I'm Burry SP500. Thank you for all the gifts. Yeah, there's a lot of donations that came in. One came in for $3,400, so I just want to say thank you to that user. Really made my day. Obviously, they waited for April 3rd, which is 4 and 3 is 7, and then a year 25, so that's a 7, and then 3,400 is another 7, right? So 7, 7, 7. So thank you so much for that. I took note of that, so appreciate it. And I apologize for not hitting everything perfectly here. I really do. It was extremely hard to see the crash in my models, honestly. Yeah, so I feel horrible about that. But hopefully, at least you see the intelligence that went into calling 5740 on the futures. You see the intelligence on the explanation of why something felt wrong about markets running up after April 2nd, being so close to the top side target of 5,800. But anyways, hopefully that helps explain a little bit of where I'm coming from and where I'm looking to for the major bottom in markets. Thank you so much for watching. I'm Burry SP500. Until next time, take care. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use?
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
a licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk of financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.